Joining us is BD8 Capital founder Barbara Doran and Citi U.S. equity strategist Scott Croner. Guys, welcome. Scott, we've got just over a week left in this month, really, I guess in the first half of the year. And you've got a 4,000 target for the S&P for end of year, which would be down about 9%. What are the adjustments that investors should be thinking about making here? Do you rebalance and shift gains to fixed income or international or smaller caps? Do you raise cash or do you just sit on your hands?
Well, it's a good question, John. So our normalized earnings yield analysis tells us that bonds actually look more attractive than stocks at this point. But, I think that's been the case for some time now. In terms of the equity outlook, I mean, this is pretty straightforward. You've had this massive move in this narrow leadership, the NASDAQ names, let's call it. And our view is that you don't have that kind of move without some form of pullback on the premise that the higher you move these stocks, the greater the implicit expectations you build in, and it begins to feed on itself. Now, we got Russell Recon tomorrow and the quarter coming up, as you mentioned. We think the stage is set for a pullback, but what we would suggest is being holders. We're more excited about putting new money to work on the cyclical side of the market.
Barbara, how big of a pullback will it take to get you back into things?
Yeah, it's a good question, because I agree with Scott. After such a massive move, NASDAQ up almost 30% year to date, S&P 14%, it is normal to have a pullback. But I thought that a few weeks ago, and we haven't seen it. This market wants to go higher. You've got retail investors trying to come in. Institutional are underinvested. So I think any pullback we have will not be deep, and I think it'll be shallow and it'll be short. So that is, it's a tough question. It's like, the famous Supreme Court justice who said, "Hey, I'll know it when I see it," when referring to the test for pornography. You will see how the rest of the market is acting, but I don't think it will be deep. I think there's too much. I think the market is already discounting 1 to 2 more hikes, meaning the Fed is nearly done hiking, and I think that's what we're seeing in the market. And so I think, and I don't agree with Scott, however, on the cyclicals, because cyclicals typically do well if you're going to see the economy growing. And I see the economy, while still being positive growth, slowing a bit. And I think that's going to be true through the rest of the year.
So in light of that, Barbara, name some names for me, especially when we have had, we'll call it not surprising, but more hawkish talk from Powell, Fed Chair Powell, over the last couple of days. We saw some surprise moves from other central banks just in the past 24 hours, and we've seen yields on treasuries moving higher. So what do you like right now? And is there a point at which interest rates moving back towards highs could change that?
Yeah, I think that if as the year goes on, if the Fed decides, if we see inflation actually start to go back up, which would be very surprising, then I think all bets are off. The Fed could go higher. But I think my expectation, and I think consensus, is that we will continue to see inflation creep down, with the core PCE stuck a little bit here. And that's why the Fed, I think, will keep rates higher. So I think, for now, I'm sitting on my hands. I'm buying selectively, like names like Starbucks, which really got hurt after they reported earnings. Fantastic earnings, 11% same-store sales, et cetera, but their forward guidance was not what people expected. But I think they're being very conservative. If you look at China, 6,000 stores there, they could be more stores there by 25 in the U.S., and the Chinese consumer is recovering in this aspect. So I think that's a very good story, has not done much in earnings. And you look at something like Expedia, which has had great growth in the online travel segment, not as quality a name as Booking Holdings, which has about twice the growth rate, but the stock is at only 11 PE. So I think there's upside there. So it's looking for names like that, very idiosyncratic picks.